Hey, 11:35 on a big show clock. Brought to you by Ag West Commodities, your market partner. More information at goagwest.com. You call Allie over there and tell them the big show guys said hello. She'll help you look at your marketing program, and I'll tell you, look at the market today, and it is a wild one again, friends. I want to remind you of your 11 o'clock word, 11 o'clock hour, which we're in right now. The word that could put $1,000 in your hand is coin. You take that to the website of the radio station you're listening to right now. Could be whoradio.com, could be 600wmt.com. A little pop-up box will float up there, and you'll be able to enter the word coin in there, and that will qualify you for a phone call you may be getting. So you have to enter, and your entry is the word coin. Then you're in a nationwide contest, and we have had a lot of winners here in Iowa, and we would like to have a few more. This will be entering our last week of the contest next week, so hop in there. You got $1,000 just aching to put in your hands. Coin is the word you enter this hour. Well, let's take a look at the marketplace. Brian Hoops is with us, and Brian's going to be pulling duty with Dwayne tomorrow morning bright and early, so we'll be following the market along with him today, and then have a summary at 5 o'clock tomorrow morning. We Speak Farm Saturday. Brian, the market is taking a beating today, corn and soybeans. We closed lower yesterday. What's going on in the corn and soybean market?
Yeah, the beating yesterday is when it started, and we're following through today. We've taken out yesterday's lows in corn, soybeans, and in the case of corn, we actually have taken out last week's lows. And so it's going, I think when we end the week this week, we're going to be looking at bearish weekly chart patterns. An outside week lower charted in the corn is a real possibility. Soybeans, it's a possibility. If we can take out technical support of 11.64 3/4, so only about 4 cents away, we could have an outside weekly chart reversal on the soybeans as well. That's new crop corn and beans. Certainly not going to look very pretty on the charts. And if it's a fund that's watching those charts closely, they may decide to kind of abandon the long side and wait for charts to heal up. So that was one thing you really have to be cautious of in here. And, we had put a lot of premium into what's happening with President Trump and President Xi over in China. And the net result is no new trades or no new trade agreements. No new purchases by China. A lot of times China will make a purchase kind of as a symbolic gesture, and they did not do that this time. All that we came out of the meetings with is President Trump said farmers are going to be happy with how much product China buys from the United States, and that's really not good enough when the market had rallied and expected that we would hear corn, soybeans, sorghum, DDG purchases, something. And it's a disappointment that nothing happened yesterday and nothing happened today with those meetings concluding. So now you're looking back at the weather and you're looking at planning progress. And for the most part, we're above average. And emergence, for the most part, above average. There's rain on tap in the next 7 days. So a lot of producers are going to finish up this week or even through the weekend. Nationwide, it could be well over 2/3 planted, both corn and soybeans. And then you're looking at rain on top of it. It's kind of an ideal situation right now. So I think you're looking at prices probably putting in their spring highs in here, maybe their summer highs, unless we get some sort of a weather adversity later on this year.
Now, that makes sense from the soybean part, and corn certainly as well, but wheat is also taking a pounding today, and I thought we were really in a weather market with wheat. What's changed there?
Yeah, I don't know that a lot of things have changed, but the Wheat Quality Council tour has concluded, and they said their day 3 findings, their total findings, are about 26.5% below last year's yields. Certainly a disappointment, but it's almost exactly what the USDA said earlier this week on Tuesday in their WASDE report. Typically, USDA has been kind of a short-term or stair-step approach when they adjust corn, soybean, wheat yields. Not this time. They just took the hatchet and cut everything and did all the damage to that wheat crop all at once. And so we're in a correction phase in here. We may go back higher and probably will after harvest at some point in time, but at $7 plus wheat, we're not going to export a lot of this new crop wheat. We are in a rationing phase. But here at this market, looking ahead, I think you could drop a little bit lower here on fund liquidation, fund selling, then find support. And wheat is one that could have another secondary type rally if, in fact, those yields at harvest time start to come in worse than expected.
Now, we did hear that China is relicensing some beef plants to be able to send product into China, and we do have an upward moving cattle market today.
Interesting you bring that up, Bob, because what is causing confusion for the cattle traders is, in fact, that China did list export licenses to send U.S. products into China. Those licenses expired 14 months ago, and so I believe on Thursday morning, late Wednesday or Thursday morning, they relisted those licenses. And then a few hours later, they took them back down off of their website. So there's a lot of confusion about why they would list those licenses as being active and then put them as inactive once again. So it did create some confusion. One thing we know for sure, cash markets this week are just red hot in the Southern Plains and on a dress basis. You're talking $15 plus type of trade on a dress basis this week. At $4.15, we saw some trade yesterday. In fact, we started on Monday, and every day this week we've seen some cash cattle trade. But that $2.65 in the South could be a high water mark here. The futures are heavily discounted to that cash market, anticipating by the time we move through May and into June, cash is going to come back down, and we could see maybe a little strength here in the next couple of weeks as we build up that demand and the inventory for Memorial Day. But past that, I think your demand starts to weaken. And a week from today, we have a cattle on feed report. I'm looking at placements 8% higher than a year ago. That will be the first time in history that April placements increased from March. And then you also could have on feed 2% higher than a year ago, which would be the highest in 3 years. So numbers are starting to change just a little bit in the cattle country.
Well, Brian, if folks want to talk markets with you, how can they do that?
You can go to our website, find a list of any of our offices around the Midwest at MidwestMarketSolutions.com, or if you want to call me directly, the number is 417-501-5132.
All right, Brian, talk to you in an hour and 10 minutes and maybe get some projections in this grain market moving forward. Brian Hoops with us.
Fun. We speak farm. This is The Big Show.
12:54 here on The Big Show clock. Brian Hoops, Midwest Market Solutions, on the telephone line with us right now. Brian, we have been watching this corn and soybean market under pressure yesterday, under pressure again today. What seems to be pushing this market lower? We're down December corn down 9.5. November beans down 12.5 right now.
Yeah, we're seeing a little follow through from yesterday's overall selling pressure. We're taking some weather premium out of these markets in here as growing conditions are pretty decent for the most part. There's certainly areas that are either too dry, too hot, maybe too cool in some areas. A lot of variance this year, but for the most part, nationally, we're going to see the corn crop above average planting, above average emergence, with some moisture in the forecast for the next 2 weeks. It's a very good forecast, and we're going to probably take a little bit more premium out of this market, maybe one more day before we can see some sort of a bounce. The markets here are also reacting to a lack of an updated trade agreement between the U.S. and China after President Trump met with Chinese President Xi in the last 2 days and had kind of promised, or at least the market had anticipated, there would be a purchase agreement that would include maybe corn or sorghum, DDGs, as well as soybeans. And all the market got was President Trump's promise that farmers would be happy with what China purchases. And so lack of that news or that information is putting a lot of pressure here, and we're seeing a lot of funds selling as a result.
Sounds like we have maybe seen the springtime highs in the market then.
Yeah, I want to say we have, and this could end up being the highs for the year. We put a lot of premium in because of the factors of higher energy prices with the war going on with Iran, some adverse conditions as far as planting, and then going into this meeting with President Xi, anticipating we'd see some export business. So we're taking a lot of this premium out. The charts are going to look really poor after today, especially for corn that has an outside weekly lower. And soybeans haven't done that yet, but they're getting close, and maybe a few more cents they will be there. So yeah, we could be putting in our spring highs, and unless we have some weather adversity this summer, it could be the summer highs as well.
Wow. Well, the market that's trading higher, despite all this, is live cattle and feeder cattle. What's happening there?
Yeah, I did want to talk about cattle here. You mentioned the first segment about China renewing the export licenses, and I said that was done on Wednesday night or early Thursday morning, and then they later canceled those export licenses. Reuters has come out since we've talked last with another story that they renewed these export licenses again. These were expired licenses 14 months ago.
Wow.
And on Friday now, the Chinese Customs website has updated showing that they've renewed these licenses after President Trump and President Xi had talked in Beijing. So that should be supportive for cattle. We're not exporting a lot of our main products. We're keeping them here because we just don't have such tight supplies of our choice and our select products. So it's a lesser cut of meats that are being exported, and China would welcome some of those byproducts, and that could open the door for better exports.
Brian, how can we talk more with you folks at Midwest Market Solutions?
You can reach me directly, 417-501-5132, or go online to find a list of our offices at MidwestMarketSolutions.com.
Or you can join Brian and Dwayne tomorrow morning,
Hey,
5 o'clock, right here as we speak Farm Saturday. Nathan closes the markets out in 30 minutes here on your Big Show stations.